Hello there, reader. So I'm going to look at idea number 3, and let me share my screen. Idea number 3 for the Outlook 25 to 25 is Mkango. So yeah, this raised a lot of comment, a lot of yeah, a lot of comment. So why did I pick Mkango? Um, so Mkango was another of the ideas where um, in fact, let's bring my little list across so we can quickly look at this. So this is the first of my sucker ideas. So this is an idea that it's AIM listed. It's not got a great track record over the past years. The pick here is based on technology. It's based on geopolitics. It's based on what I believe could could happen in 2025. Obviously, none of this is guaranteed. I don't have a crystal ball or a what's that thing in the Lord of the Rings? A palantir? Is it? Could go and look at the Eye of Sauron, which seems a bit pointless when what you're trying to do is see the future. So the future is Sauron, according to wizards that use palantirs. But anyway, let's not worry too much about that. So yeah, look, I mean, it's one of these ideas that could go very, very right. It could go nowhere. So you know, it is a high risk. It is a high risk. So this potential return is moderated by performance, speed, and loss. Now I've said medium, medium, and high, and you know that's an interesting thing to talk about today. So overall, this is sort of potentially one of my highest returning. In fact, it is. I've assessed it to be the highest return, even after I take into consideration risk. So that's a pretty bold statement. So can I substantiate that, or do I need to go and change my risk methodology? Let's work through this and see what we think. Right. Okay. So and it's also true that they've diluted. So I've just kind of given you the facts and the figures there. It's 27.5%. So you're now, if you're a shareholder of Mkango, you're one of 297 million other shareholders, assuming everyone's got one each, which, yeah, good luck with your trading fees. And yeah, as I say, it's been pre-revenue. In the past, so that's kind of part of the reason it gets a stinky score, is that you know there's no track record for anyone to point to. But I talk about compelling value. So compelling value, unique technology, and compelling geopolitical reasons to believe that they'll succeed no matter what. Um, so look, there's three parts to this story. There's the mine, there's the refine, and then there's the recycle. So I mean, let's work through these three parts. So the mine itself is it's fully permitted. It's got a pre-feasibility study. It's got a, um, um, a definitive feasibility study. So if we go and have a look at that definitive feasibility study for Songui. Let's see if we can find that. So it's this basically. So 2022. No, I'm not a robot. No, I don't want a newsletter. I just want a feasibility study. Yeah. So look, I mean, it's based upon. You can see here, 559 million net present value at a 10% discount rate. Take your own view on whether 10% is too high, too low. But with that discount rate and with that return, it represents an internal rate of return of 31.5, a payback period of 2.5 years in terms of gross cash, also net cash, and full production, 5 years. Notice 5 years from start. Um, uh, yeah, 5 years from start of capital expenditure. So it's 2.5 years to build the mine and 2.5 years to get your money back. Is kind of what that's saying, and it would generate 2.1 billion. Cash flow, cash flow throughout its life. And this is based upon a number of assumptions, and some of the readers have quite rightly commented to say, well, it depends upon the prices that were being used, or the assumptions that were being used in here. And you can see, there's some pretty strong numbers in terms of the percentage of oxides and the operating life. All looks pretty good. The Let's see if we can spot the assumptions that they made around pricing. Um, do they actually disclose that? You would imagine they would. So it's a 1.16% total rare earth. And here we go. Um, so it's based upon it being $32,600. Now that is based upon it being a mixture of rare earths, and some rare earths are rarer than others, and some rare earths are more expensive than others. The one that I guess is particularly interesting is the NdPr, which is the neodymium praseodymium, uh, the acronym being NdPr. So this is 31%, 31%. So it's based upon that average product price, and yeah, it's also, yeah, counted by 27% because there is no refine capability. So in other words, they're selling an ore, essentially, rather than a refined product. So there's no refined product. So there's a discount applied to the forecasted value because of the so essentially a 22 kilogram, $22 per kilogram discount applied because of the fact that the DFS assumed that Puławy, I'm assuming that that's how you pronounce that name in Polish, that's a Polish name. So if it's Puławy or I don't know what else you'd pronounce it as, but yes, I'm going to call it Puławy, and then if I'm wrong, I'm wrong. So so yeah, look, $32,000. I mean, if we go and look at this is Linus Rare Earths. This is their 26th of November presentation, and I mean, it's quite difficult to kind of get precise market prices for some minerals. But this seems to be a pretty solid way of looking at it. So $32,000 a ton would be kind of just above where my cursor is here, and that's the price today. So the price today is 50. The price back in 2022 when the DFS was produced was 110. Did they use 110 or did they use 30? I mean, the DFS says 32, but 32 overall average. So it kind of also then depends on what remaining 69% was priced at. And again, I can't see that they give that. Oh, maybe they do. Here we go. Let's keep going. Mind. So 85% recovery, grade of 55%. Here we go. Base case, this, upside case, this. Ah, yes, okay, increasing to this. And this is based on Adamus. And of course, 2.5 years from now, and sorry, I'm sort of spending a lot of time showing you all of that. But one of the interesting things was that yeah, and I mean that price there. 516,000 Chinese yuan is 71,000. So that's what Trading Economics told me when I wrote this article, that the price is higher. Is higher. So we could argue about whether the prices are going to be lower or higher into the future. Adamas, who are a pretty reliable, experts in this area, tell us, and it's in this article a little bit further on, that Adamas tell us that the forecast prices going forwards into the future are going to be a lot higher. So it's this blended price here of um, so this is a blended based upon the mix, based upon it being 31% NDPR. So we're looking at currently around 57, which kind of ties in with what Linus are also telling us, growing to 68 to 70 to 76. So on the basis that we're saying 2.5 years takes us to somewhere between 70 and 76. So if anything, to my mind, that DFS could be conservative, and certainly other aspects like a 10% discount rate. I mean, for an 18-year life, we're essentially saying the later years, if this mine starts in 2027, and it's 18 years, we're kind of saying, well, in the years 2023, 24, 25, like, the value of this mine is practically worthless. You make your own decision on whether that statement, when we know that energy transition and the demand for um, magnets and these minerals is the forecasts are, and I'm just going by forecasts and the evidence that we're not talking about a plummeting demand for these things. We're talking about an ascending, growing demand for rare earth magnets. So I guess, a lot of people get fixated on the mine and the economics of the mine. Now, I've obviously argued a case there where I don't kind of get where people, show me the evidence of where the prices have dropped and how they've dropped and what like, do the maths yourself. If you think, if you know the numbers are wrong, then work through the numbers, because I've worked through the numbers and I can't see that they're wrong. If anything, they're wrong, as in they're too low. But look, this mine and the next step here is a final investment decision. That final investment decision likely will not be directly Mkango, because obviously that would be a lot more dilution. So it'll probably be debt or um, an off-take agreement. It'll be something. Um, Possibly even some form of government grants, government intervention. And I make this point that 92% of rare earth magnets are produced by China. So you've got the perfect pinch point. You've got things like this where the moment that they restrict, and in the article I talk about how electric vehicles, in fact, today there's in the news, Honda and Nissan, I think it's Honda and Nissan, are talking of a merger and talking of a joint venture. And part of the reason for that is that the ascendancy of Chinese electric vehicle production has really hurt the Japanese car companies, that they cannot survive in their current form. They're merging to survive. Now, when China wields that level of power with its automotive industry, and if rare earths are crucial to that automotive industry, and if tariffs are being imposed on that automotive industry, where do you think the tariffs are going to go? I mean, it's to my mind, tariffs on rare earths coming out of China when they control 92% of them. I mean, doesn't it go without saying? The Chinese have got a track record over decades. I remember back in, I think even in the 90s, where Volkswagen was sort of, yes, we can sell into China, but we have to manufacture our Volkswagen cars in China. We have to work in partnership with a Chinese car company. Yes, there's some level of technology transfer as part of this opportunity. I mean, China have got this very, very clear track record of working strategically on a state capitalism basis. So when people say, "Oh, well, I'm not sure that that will happen," I mean, it's like, well, just go and look at your history, and it's not even ancient history; it's recent. It's the last 20, 25 years of what they've been doing again and again and again and again. So it baffles me as to but equally with rare earths, there's a lot of rare earth companies and miners and opportunities in London and elsewhere. Linus is one of the really big successful ones. In fact, we have a look. I mean, this EBITDA here. I mean, these guys were chucking off, what's that, 300 million profit? Sorry, in sterling terms, 300 million sterling, and I don't know what their market cap is, but I think they're pretty large. But to be making 300 million in a year, um, let's see if we can see that. Yeah, here we go. Well, yeah, if they've got 1,100 employees, I mean, their market cap's got to be kind of maybe a few hundred million, something like that. But anyway, that that um, that sort of gives you an idea that it's only really a limited number of businesses that can commercialize what they're doing, and this is why I believe Mkango could be one of them. Is the fact that they've got a mine that's fully permitted, that's got a DFS, that has good economics, um, that are that are an off taker or an investor would look at it and say, well, look, the projection from Adamus is this. The price has just exploded because of tariffs that have been just introduced by the Chinese. You'd imagine that there's an investor out there that would look at that and say, okay, these are my terms. So that's my supposition. That's my supposition. But the mine is only just a small part of the story, reader. So let's move on. Obviously, demand for magnets is increasing year by year. It's forecast to grow, and these are used in wind turbines. And of course, we're installing more and more and more of those in the UK. And um, our energy secretary. He's keen on those, and obviously electric vehicles use them. So there's more and more of those, and they're also used in aerospace, in kind of various different industrial applications. And yeah, so I mean, we're talking about a growing demand, the potential need for supply, but also that we talked about an 18-year life. This is only just one of several projects in Malawi that Makango own. I mean, these are all early stage, apart from Songwe. And again, I might be pronouncing that wrong, so forgive me if I'm Malawian pronunciations are not quite what they should be. But anyway, moving on to refine, and again, refine is kind of a small part of the story as well, potentially. That the idea is that for just $3 more, you can upgrade your ore to a refined ore to refine it, and the IRR around that is very strong, very very strong. The net present value 200 million. I think capital cost is, yeah, here we go, 120. So in other words, we're looking at a risked and discounted 320 million over 320 million return, if they choose to implement this. The idea being that they'd install it near to where they can get the reagents for doing the refining, and they've got a site for that. There's a place in Poland called Puławy, um, and so yeah, it would just be part of that jigsaw. Um, Brings me on to the final part of the story. So currently, yeah, so you've got short loop, long loop recycling. So the long loop is a energy expensive, energy intensive. Apologies, energy intensive and expensive by it being energy intensive process. Um, that kind of isn't terribly environmentally friendly. So this is actually a patented technology that uses hydrogen as a processing gas, and it's our University of Birmingham that that developed this technology to basically take hydrogen and to pass that over the magnet scrap and the solution to bring out the sintered magnets without requiring heat. So it's 88% less energy intensive, and they've dubbed it short loop recycling. Not sure what the loops refer to particularly. I haven't worked that bit out, although I have looked at the engineering behind it and tried to get my head around it a little bit. So yeah, it's interesting. It is interesting, and it's supported by the UK government. In fact, if we go to this website here, um, the UK is part of the Minerals Security Partnership. So you can see this is gov.uk. Yeah, don't want cookies, thank you. Um, and that was quite recent, and kind of more or less on the back of this, we saw an RNS from Mkango saying we're now talking to Japan, we're now talking to Canada, and guess what? Japan and Canada are two of the countries of the 14 partners countries in the MSP, which is Minerals Security Partnership. So could this be funded by the government? I mean, if only we had a Labour government that wanted to kind of implement sort of lots of tax rises and then sort of have a war chest to develop projects and things that they deem a good idea. I'm not saying it's going to happen, but we don't. We do have the right sort of government that could do that sort of thing. And the UK government are not the only ones. I mean, the Canadian government's just the same, assuming that they're still there um, in the near future. Obviously, Japan has a new government, and the new prime minister of Japan is interventionist. He's quite a yeah, in open to government intervention into strategic investments. So yeah, I mean, again, this kind of is another reason to think, well, gosh, this yeah, I mean, I don't know anything other than what I've read, but the fact that it's already had government money, that there's a government quango that, and it was for the automotive, so it wasn't the MSP, it wasn't, and it was a relatively modest amount of money. But yeah, this technology anyway, it's already producing. So they've built a pilot plant. They're looking to scale that pilot plant to a larger plant, so 100 to 300. And the idea is that, and that's kind of what it looks like. So looks kind of like an industrial process with machines that basically outcome magnets at the other end. So that's the steps and stages that it will go through to arrive at a finished magnet. So it's taking um, scrap, sieving it, powdering it, degassing it, and so on. Anyway, you can read all of that for yourselves. You don't need me to read it to you. But yeah, they've had a modest amount of grant funding. They've um, they've also got other strings to the bow, in the sense that they've got a long loop part to the UK business and a short loop part to the UK business, but also a German part that's doing the same thing as the UK, a short loop, but again looking at targeted production of 100 to 330 tons per annum. So both of these are modest scale, here and here. And then there's Japan potentially, and in fact, in a recent investors presentation, he took the CEO of Mkango spoke of three countries. So obviously Japan's the one that we know of, but I think he talked about Canada on the call, and he said that there's discussions, and he wouldn't be surprised if, I think he said he wouldn't be surprised if three additional countries are announced in the next few years, I think were his words. Obviously, go and watch it for yourselves. But I've not put any value against this, even though obviously Japan has a huge industrial base and would be an obvious choice for a fourth location. The one that I haven't mentioned yet as well is the American one. And the recent price rise of Mkango, and by the way, the price has risen and now dropped back to what it was before. The price rise recently was based around the announcement from the US. It's only 40% owned by Mkango. The other 60 is owned by uh, Kotech. It's an American listed company. But the economics, so they've done a feasibility study for what a US recycling operation would look like using the Mkango technology, the HPMS as it's called, and the economics are brilliant. I mean, that's obviously 23% IRR. That's 262. Um, and then the sort of forecast prices, it would look more like 33% IRR. Obviously low cost of production. I've used that 55 price point. That's today's price, usually the forecast price being 75 per kilo. So obviously again, that's just conservatively priced in at that for now. And production of that much, 40-year life, um, but with the idea that they would grow this, and then um, the economics that depend upon changes in price, changes in capex, changes in operating costs. So yeah, I mean the US have said that they're moving forwards with the idea to sort of move ahead with a notice to proceed by middle of next year. That they're working on the detailed engineering and the cost, the value engineering to, there's potentially opportunity to bring down the cost. And the other synergy that I think is interesting is essentially you've got the British, the Germans, the Americans, three different operations essentially doing the same thing. Obviously, the British further ahead than the other two, but there's that whole cross fertilization of, oh look, we're doing it this way. We've got this idea. So you could kind of imagine that the experience curve of all three, kind of, they're cooperating essentially, and they're whilst they're part owned by different companies, it's the same different companies. So there is a small German ownership. I think it's the management of the German operation that own, I think, 10%, something like that. But yeah, Mkango own a percentage, Kotech own a percentage. So yeah, look, I kind of I suppose the 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 valuation, and obviously I can come up with these very, very vast valuation. Obviously, in my spreadsheet, I said 350%. I mean, theoretically, it could be a lot more. It could be a lot more. And but that's an unrisked value there. So yeah, it's one of these that could be very, very successful. It appears to tick a lot of boxes around need and around unique technology, around having multiple strings to the bow that they can move one way or the other depending on. But even just and actually another factor that I haven't mentioned is even just the legislative part of, we want you to recycle more of your rare earths. The obviously the energy cost of mining rare earths is vast. I mean, obviously tons and tons of rock, and the um, the percentages, as you saw with the DFS, I mean, it's 1.1%. So you're doing a lot of lifting and shifting to actually get to the good stuff. So recycling makes a lot of sense because it's energy efficient compared to mining. But if you've got a way of recycling that's 88% more energy efficient, I just, for me, that feels like you're just pushing on all of the open doors as far as government and as far as legislation. And is that there's a mandated level of, I think, 30% within the EU of rare earth magnets are going to have to be recycled by 2030. So I think I say that in here. If I haven't, then I apologize. I don't think I'm making that up, but yeah, look, I mean, what I've done to kind of get to sort of half. I cannot believe that it takes me half an hour to read one of my articles to you. But anyway, um, I, I won't pontificate about that because otherwise it'll take more than half an hour. So look, my valuation was based upon taking those different operations, taking what the capex would be, taking a sell price, taking a cost of sale to arrive at a volume that then drives an EBITDA and I'm taking a chunk of cost to arrive at a net profit. So this is sort of the operational, and then I'm kind of using a 20 times valuation. I mean, this being unique technology, and uh, you can imagine that being quite sought after. So to my mind, that's a fairly, I think, fairly robust valuation, and obviously the different parts to this. Of these operations. Now, I've obviously, all of these are blank because there's no recycling going on with the mine and with the refined parts to this. So I've kind of not included anything here for that reason. But basically, these numbers, what I've then done is I've discounted them into the future. So I've discounted them to arrive at to earnings of 1 million a year for the next, I think I used a 30-year. I'm trying to remember yeah, I think it's a 30-year timescale. So that discounted over 30 years gave me a 14 million net present value to that stream of profits. And that's kind of assuming that, that doesn't grow, that's just static. Obviously, you could take your own view on that, whether that perhaps is kind of quite a small number, but that valuation and then that net present value, that's obviously they're sort of connected, to where this is sort of lower than like a 20 times valuation. If I sold that operation to somebody, what would I sell it at? I'd sell it at 20 times. um, so yeah, I kind of get to these net present values. Now that NPV is taking the NPV from the DFS. That's taking the NPV from the DFS. Oh, sorry, from the, it's not a DFS, it's a PFS, I think, for Puloe is yeah. Anyway, so you get to, and I've kind of assumed in a corporate cost there as well, just to kind of offset that a little bit. But you get to something like a 1.67 billion net present value across the whole thing, and that's really just using the numbers that are in the documents. I mean, it's the numbers in the documents for this, and then these numbers are, well, that is pretty much numbers through the RNS. Um, yeah, based upon sort of generating that level. So what I then did was I said, well, obviously Macango don't own all of these operations. They own a proportion of them. In America, they own um, 40%. And this 39.7, because somebody asked me about this, if I just quickly go back up here to this funny diagram, uh, this one here, it's because it's 79.4, and then 50% of 79.4 is 39.7. That's kind of how I arrived to that percentage. Because somebody said, well, why is it not, what did they say? Why is it not 50? And I said, well, because they only own 79.4, so you've got to do that times that to get to the ownership level percentage. Anyway, yeah, so they don't own all of it. So okay, if you only own 90, because Malawian government want a 10% free carry, so well, really, you only own 675 of it. Yeah. So anyway, that's how I get to that number there, 1.2 billion. So we're losing half a billion to partners. There's 500,000 of skin in the game for partners. What I've then done is I've said, well, okay, I mean, it's all pie. It's not pie in the sky. I mean, it feels like it's real, but let's just say that let's put a risk against it, and it's all quite risky. So I've said the chances of Pullawi kind of happening is 1 in 20. So 5% chance puts it at a weighted risked value of $10 million. Okay. Um, Here I've said there's an 80% chance that an investor won't look at those compelling economics and say those are compelling economics. 80% chance that that's not going to happen in 2025, which puts it at a weighted valuation of 135 or 36p a share. So this is basically just the translation of taking the diluted number of shares and just doing it mathematically. Anyway, um, so look, I mean, even if the mine is toast, even if if the mine is toast, then this is toast. So that takes like 39 off the table. You're still looking at 15, which is two times today's value. And that's based upon the American, a 3 in 4 chance that it just doesn't happen, that they don't look at those compelling economics and say those are compelling economic. I, I just I find it difficult to believe that that will happen. Plus, the fact that the American government won't perhaps get involved as they've got involved in other places and in other projects. Um, the uh, there's a yeah. I mean, there are other examples that if I could remember them are examples where the U.S. government have intervened um, to to encourage production. This kind of feels like that's a very very harsh valuation. So even taking that, I think it's a harsh valuation. You might not. You might say no, that's too lenient on them. 3 in 4 chance is too low. It's almost certainly going to fail. Well, look, it's up to you. I mean, obviously, if you do, I suppose, if you do consider, those risk factors are double what they should be, or half of what they should be, then you arrive at minus these, you arrive at 7p, and you say it's fairly valued. Forget about it. It's up to you. I mean, all I'm saying is that it, it I don't think I'm kind of blowing smoke when I sort of say, well, I think there's a 3 in 4 chance that the American recycling's not going to happen. Um, and even like the UK recycling's not going to happen. It's already happening. So 20% chance of it happening when it's already happening. I mean, again, you can just take your own view on that, can't you? That um, because even just that, that 92 million at 20%, I mean, we're dropping 20 pence off there. That you might say, well, okay, it's not gonna, the mine's toast, America's toast, Germany's toast, but I could see this taking off in the UK as, even on that basis, it's worth more than 7p. So anyway, that hopefully gives you a bit of a perspective on why I kind of pick this idea. It does have risks. It does have risks. It really does. And it doesn't have a good track record, but you can't help but I can't help but look at it and say there's a good chance that it could return a great deal. So I guess yeah, I mean, I don't know if it'd be useful just to kind of quickly talk about comments. I don't know if there was um, anything in here. Yeah, so yeah, see, 2 times today's price. I don't think we saw that based upon what we saw today. So not sure. It'd be interesting to kind of explore that comment there, and if there's something I've missed, then fair enough. But um, yeah, and yeah, I suppose we can point to other examples where other projects similar to this haven't worked out. It's true. Um, yeah, that's yeah. So we sort of had a bit of a chat about that. Oh, and might be this much lower price. Yeah, so it's pretty much the same point. Um, here we go. Yeah, this might be. Yeah, so the price forecast that in 2022 increasing to that in 2025 and that in 2035. So interesting. Uh, yes, okay. Yes, there, isn't it? It is there. Um, yeah, so I guess that's the thing you've got to then consider is are those forecasts? Ah, yes, this was what I was looking for actually. Yes. So are those forecasts realistic? So as we can see here, some of the rare earths are pretty worthless. $1.40, $1.45. Others are obviously very expensive. Um, but it's also the plentifulness. So that the split plentifulness. Yeah, so look, you've got what, 57% pretty worthless, so it's the 37%, and of that it's a third of it that's gonna deliver the bulk, whereas this down here then is what, just a very small 5 or 6%. So 32 plus 6. Um, yeah, that kind of gets you to your 100. So yeah, look, that's an interesting thing to think about then, is that for a third of it, so if we go back to this, if we go back to this, yeah, this is what we want. So the NdPr is $50 a kilogram, and it was 110, but before that it was 50. So when they did the DFS, it was 110. But what they're saying is um, well, that's the total rare earth basket is 65. So I think that includes the stuff, that 65. So that's the total basket. So the base basket is this split here. But because we've got things in there that are hundreds and thousands, obviously what we'd have to do is mathematically work out, we could probably fix all of these and work out the average to those. And then we could take this bit that's the bit that's contentious, and we could model what that looks like at 50, what that looks like at 70, what that looks like at different levels. Um, but yeah, I'd say on the basis that we're saying 110 back then, and we're saying 50, 55 today. So 110 to 55 is half. That is half. So it's half, but it's a third of the basket. So we're only really talking about a sixth, if you think about it. A third of a half is a sixth. So if the okay, well look, that's an interesting point. So I think what we then need to say is, and my um, let's get back to my risked. So what we're saying is that this 750 needs to drop by a sixth. So, and it's this one here that needs to drop by a sixth. So, I mean, I'm not dropping it by a sixth, I'm dropping it by 80%. Now, obviously, you could say, well, you're doing that based upon the chanced risk of it continuing. But what I would say is that 135 massively includes that 16.6% difference in the price of neodymium and praseodymium from 2-3 years ago compared to today. I mean, we're essentially saying 110, 120 million off that number there, 550. So actually, let's do it a different way. Let's say take 20% of 550. Yeah. In fact, let me do a little trick of, if I can find it, and I built it, so I should find it. Uh, here we go. So what we're saying, oops, what we are saying is that we need to moderate that by that, which gives us that, which gives us that, which gives us that. So we're now saying the risk value is 48p because of NdPr prices. I'll put that into the article now. I'll save that version and put that in there. I think that's fair. I think that's fair. So thank you to that reader for that comment. So obviously, what I want to do is sort of reflect. And in fact, what I'll do is just put in this has been moderated by 16.6% to factor in 55 per kilogram NdPr. Bear in mind that in 2.5 years' time, I'd be very surprised if it's 55 a kilogram. But look, let's just say it will be. Let's say the Chinese don't cut us off. The prices are static. I mean, even like I say, there's so many upsides to this well, you can tell why I'm keen on it, can't you? Probably. So let's do that, and then we're all happy. So look, to conclude, thank you for watching idea number 3. Sorry, obviously I've spent 50 minutes talking about one idea, so that's the current the current record for one of my ideas. So ho hopefully I can make some of my other videos a little bit more succinct and to the point. Um, anyway, Oak Bloke signing off. Thank you for listening. Cheerio.